How many times have you taken a trade following the correct market structure and sticking to your plan only to be taken out by a stop loss or break even? It's super frustrating, right? You feel like price always holds the market structure, but then when you jump on it, bam, it's a stop loss. Well, after countless hours of backtesting and live testing, I had one of my biggest aha moments. It helped me see what I was doing wrong. And in today's video, I'm going to unveil this powerful concept to you. And no, it's not about stop hunts or fake outs. Actually, the reason will genuinely surprise you, especially since not many traders discuss about it. I'll call it the little combo between order flow and time frames. If you're keen to level up your trading games, stick around till the end. Let me introduce you to the intro and see you shortly, guys. Alright guys, here we go, let's get started. So first thing first, let's start understanding, okay, what are the main differences and key importances between the time frame and order flow. So what I'm going to be doing now, right, is I'm going to be first of all explaining to you what I mean when I say order flow and what I mean when I say to time frame. And then we're going to jump on the chart and then we do the examples. I'll show you how I merge them and help you to avoid countless of losses and break even that you can literally avoid it just understanding watching this video till the end. So first thing first, what do you mean by order flow? So when you have like the price structure, right, you'll hear me that saying a lot. For me, market structure and order flow. So when I say order flow, right, is basically you can see over here you got price going up and you got price going down, right? So the order flow itself is basically the full direction of where I see or on the chart the market going as soon as I open that. So that means that it doesn't have to do anything directly with the market structure. I don't want to confuse on that, but one second, because I'm going to explain you this, how I see it and why this is important. But basically, long story short, is let me show you here on the chart, so that would be actually very easy for you. So this, for example, right, what can you see? As soon as you look at this price dropping all the way down here, right, what is the first thing you can see? Is basically price is melting all the way down, right? So what is this telling you? Is that the intention of the price, right, the order flow is bearish because price is dropping from all the way up here to all the way down here. But now, if I go in here and I will ask to you, what is exactly you see right now only on this type of price action, right? You will be still saying, well, oh, I see price going higher because you got only this order flow that you can see. So what is then the market structure when it comes on order flow? Market structure is basically everything that you can see within the order flow. So what do I mean is this? In order for price to build this order flow, so right now price is going to the upside in this range, in this frame over here, right? But the market structure is basically what is happening within these candles, within this order flow that need to happen in order for price to create the order flow. You get me what I'm saying? So basically this your structure. You see these tiny points that are marking up and down, up and down. This is the structure that is forming across different time frames, all these different time frames in order for price to create the actual order flow towards certain direction. So in this case, the structure has been created, right? So if I go to 5 minutes, let's go to 5 minutes, right? Because if I go to 5 minutes, for example, right, here you can see within the 5 minute structure, you have the bearish order flow happening. So the structure is forming to create the price to go all the way down there. Now, as always, I always say on my channel, I don't want to use fancy names, fancy terminology, because I want you guys to understand the core concept and I try to simplify it as the best way possible. Because some of you guys might be saying, oh, why is this guy talking about, oh, the order flow, whatever. Because I know what is the actual order flow. I know what is the actual market structure. But I'm giving you the best and the simplest way possible for you to understand the key differences in order for you to understand how technically you can use that. Okay. So here, for example, in this leg, you can see that the 5 minute structure is forming that is needed to create this order flow towards the upside. So that's where I will be using a lot on the understanding of the order flow, and which is the topic I will be using to cover this video afterwards, right? Now, going to the time frame. Why is the time frame I'm talking about and why this time frame is actually very important? Well, the reason why time frame is important is because time frame allows us to understand, first of all, what type of trader can we be, right? So as I say so many times, time frame is one of the most important things that someone need to always take in consideration. And that can start from all the way to M1 over here to all the way to 4 hour, daily, 1 hour, or even weekly. Now, why this is important is because us as a retail trader, right, we do not have access to some sophisticated tools, but we do have, however, access to this type of data that can help us to build a narrative, to understand what actually is going on in a specific range and in a specific order flow. So what did I say before? If my order flow is bullish, I want to see the structure happening within that creates the order flow. And the way I do that is using the right time frame within the right order flow. So what do I mean by that? Is that if I have, let's say the order flow, I'm a daily range. So this is the low that makes the high. This is the low that makes the high, right? This is a daily time frame. I can get in M1, right? To say, oh, I'm using the M1 chart to understand the structure of M1 to define this big order flow, which is the daily. No, that's not how it works. And that's why time frame is very important, because you have to go gradually. You have to go from one time frame to another one. Now, how do I use the time frame and how you should be looking at it? A lot of people, and that's another mistake that I see happening a lot, is that let's say this is the price structure they have, right? So again, bullish structure going to the upside. A lot of people, what they do, okay, they see, okay, this is my daily low, this is my daily high. And they're like, okay, now from daily, I go to 1 hour. From daily, I go to M15. From daily, I go to whatever, right? Why? Because let's say the price breaks over here. They say some sort of price steps to some sort of order block or inefficiency, whatever you're going to name it, or whatever you're going to call it. And then they're like, oh, I see 15 breaking to the downside. I'm taking the trade now because I'm going to get the retracement of daily, right? Well, that's not the case. That's completely wrong. Why? Because the right order flow, the right way you should be using in the time frame is always in 3 phases. So what are these 3 phases? It's actually pretty simple. So you start with the higher time frame, right? So you have the higher time frame, right? That's the key one you need. Then you got the next one, which is the most important one that a lot of people don't get it, which is the medium time frame, right? And then finally, you go to lower time frame. Now, why this is important is because higher time frame tells you the narrative, right? What is actually going on and what are the intention of the big boys. Okay, so I'm gonna say like big boys. I'm sorry, my handwriting is not the best, but you guys are listening, so that's the most important thing. Then my medium time frame, what is telling me? My medium time frame is telling me the intention is creating within the higher time frame. What exactly is price going to do within specific zone when it reached that level within a higher time frame, right? So let's say like before, when I say the price broke the structure, right? So if we can go above, where is it? Sorry guys, this drawing are not the best, but okay, here we go. Let's say this is my higher time frame. I don't have to go to lower time frame. I have to go to medium time frame to see what exactly is going on price to reach to this level to the left, right? That's what I wanted to say about the medium time frame. Okay, so now we got the medium time frame. Now what next? When I have a medium time frame confirmation, so let's say this is my zone, right? That's where the higher time frame hits, like daily, and then in medium time frame, I have to see some sort of change of momentum, character, break of structure, whatever, name it, right? And then in lower time frame is where you start sniping your entries. You can either leave a pending order, so you can refine your zone, leave a pending order, or you can even wait further to get a lower time frame confirmation break and then take the trade, okay? So why do you need to do that is because then, based on this structural way that you are putting on the time frame, you're capable of building a solid narrative. And it doesn't mean that if you go to a higher time frame, medium time frame, lower time frame, you will always get the perfect trades. No, that's not the case, because at the end of the day, it's always all about probability. However, it allows you to jump from one time frame to another one, structure-wise, with more efficient way, with more equilibrium, right? You don't want to go like higher time frame to M1. Trust me, you're going to hit so many losses. And that's one of the key reasons why a lot of people hits losses. But that's not what I wanted to discuss. Now, I'm going to discuss and I'm going to show you why you guys, right, hit so many break-even and losses. Now, I hope you guys understood the difference between the order flow and the time frame. Why? Because this key difference between them, between these two things, if you merge them together, you can understand why you literally hit so many losses. So now, let's say that I go to 5 minutes, okay? Guys, pay attention because this is very, very, very important, okay? Let's say I'm going to 5 minutes. Okay, what's going on in 5 minutes? So if I remove all this drawing over here, right? And I'm going to say that we are in this range from this low, right? Let me take the pen tool. Okay, so we are in this range and this range. This is the high time frame. Now, if I were to ask you this question, follow me carefully, okay? Let's say we have a break of structure over here. Would you take this buy? Yes, I guess, right? Yes, because, okay, now you can see the price in hand side, but then again, just following the structure, okay, I'm asking you, will you take this? Yes, why not? Then again, price goes up. It doesn't give you the retracement that you needed. Then it goes up again. Will you take this buy over here? Yes, why not? because price is definitely going to the upside. So therefore, you will be definitely taking the price. Okay, so you will be taking price going all the way to the upside. Now, same thing over here. Price going above. Will you take that? You will say yes. Will you take that? Right? You will say yes. But what if I were to say to you that despite the fact that you are following the structure, right? So you're going with the structure, 5-minute structure, beautiful, the order flow is bullish. There is a massive, massive difference between this structure point over here and those over here. Mainly, forget about this one, mainly this one over here, mainly this one over here, right? Or mainly this one over here, right? There is a massive, massive difference in this type of market structure within 5 minutes compared to this one. Can you just think for a few seconds why that might be the case? If you have followed so far the lesson and I explained to you the difference between the order flow, the structure, and the time frame, I think you pretty much can now guess why this market structure cannot be seen the same exact way of this one, and on this one. Well, guess what? That's the real order flow. And that's one thing that people always miss out when it comes about that taking the trades on the structure. What do I mean by order flow? Well, you see, here, when we see the price is going higher, so it's going from this low to this high, we know the order flow is bullish. Okay, cool, because we can see the price is building up this story. We can also see the market structure is giving us in 5 minutes the bullishness. But one thing that we cannot see over here, and it's something that I stress out so much, and I want you guys to grasp that as well, right, is the overall picture of what is happening all the way to the left. All right, let me zoom out again and let me ask you the same question again. What can you see now and what is actually going on? Why do you guys think now that this zone over here, this structure point over here is completely different than this one, and then this one? Are you guessing it? Are you understanding it? Nope. Okay, don't worry. If yes, it's beautiful. If not, I'm explaining to you now. So this is, now that I'm zooming out a little bit further, I can see that yes, my order flow is bullish. However, what is going on here is that right now, I don't need to worry. As soon as I say the break of this, right, I cannot keep following my 5-minute structure. Why? Because it's true the order flow is bullish. However, based on the different time frame I have over here, right, this high that has been broken now, this is reflecting to a higher degree of another time frame, which is can be 1 hour. Can be 1 hour, or it can be 4 hour, right? Or it can be, let's go to 4 hour, or can be 4 hour, right? So what is this telling me now? Is that, yes, it's true, I was using 5-minute structure over here, but as soon as I have a break of this structure, for me, following the structure in M5 is worthless, because literally the next thing you know is that the likelihood of you hitting the stop loss is extremely high, because now price has switched the structural point from 5 minute to 4 hour. Therefore, you can expect price to see a retracement coming ahead. Now, I know it sounds kind of strange, and some of you might find this simple. Some of you guys will be probably still confused. No worry. Now I'm showing you some examples on the chart, right? So let me zoom out a little bit, and then when we finish the example, I'll give you some tricks and tips on how you can take the advantage of it in order for you to take some crazy trades and some good trades. Okay, so let's start with somewhere around here. Now let's see this price action over here. What's going on? Okay, 1 second. So you can see clearly that we are in a bearish momentum, right? So you can see the structure is so beautiful over here. You got this high making this low, you got this high making this low, you got this high making this low, you got this high making this low. Now you take this trade, it goes down, it doesn't make a new low, bam, it takes you out, and then it goes on your favor. Like, guys, come on. Let me ask you the question again. Why do you guys think that, let's say that you, as I said on my intro at the beginning, right? You see the structure playing out and be like, oh wow, it's beautiful. You know, price retracing and then it's going down. Price retracing is going down. You know what? I want to take a trade now. Let me take a trade from over here. But then bam, maybe this one is you, maybe this one is me, right? We are entering over here because it's like, yeah, this is bearish, it's going down. What's going on? Why not? Let's take it. And then the next thing you know, bam, you get taken out. And then you see price literally going towards the direction. Now that I gave you a previous example, and now that I explained to you the difference between the two, what do you guys think this is happening for? Do you want to know? Let's zoom out a little bit. Well, check this out. You see what I'm talking about? Yes, exactly. Because it's true, the order flow and the structure is going to the downside. However, if you don't pay attention to what's going on the higher degree of order flow, which is this one over here, right, you will get stuck. Because now you know that actually the big order flow is this one, right? So the structure that you're looking at is not wrong. It's just like that structure is within a part of the order flow, which is a bigger order flow, that is literally not fitted on the right place in the right time for you. Okay, so that's the reason why now you take this trade and then you get stopped out. And or even, for example, let's say you've taken this and be like, oh, that's amazing, I got a profit. Maybe your TP is somewhere below here, and then boom, the next thing you know, price takes you out. And then the worst thing is that it goes to your favor. But wait, I'll show you how you can take the advantage of it. I'm going to give you some tips. I'm going to give you some bonus so you guys can use this appropriately, being more aware of what actually is going on the chart. I'm going to give you a couple of examples so you can already start training your eyes, right? Same things over here. What do you guys think is going on? Okay, again, we got high, we got low, we got beautiful high, you got beautiful low. The next thing you know, yes, I want to take this beautiful trade. Why not? Amazing supply, bam, bada, bam. And then boom, you get taken out. Yes, because you see this high? Yes, this high gets literally taken out. And then you'll be like, oh boy, what did just happen? And you know what is the worst piece? Is that some people, when they see this, like a break to the upside, they're like, okay, now I'm going for a buy. And the next thing you know, boom, you get burned out because you don't know what's going on. Again, to the left, the order flow. There you go, look at this. Boom. You see that what I'm talking about? So what's the order flow? Is this going down, going high, going down? So this is not a break of structure. Yes, it is internally, right? Some of you might can call it, oh, liquidity drop, internal liquidity drop, whatever you want to call it, but it's the same thing, right? And then you hit a stop loss because you don't know that now the order flow of a higher time frame needed a retracement. Guys, I can go like the whole day of giving you this type of example, like the whole bloody days, and I can promise you that eventually they're all the same thing, like literally the same thing. And you have to understand that because I used to make this mistake so much, right? I was like, okay, the structure is going down, high, low, high, low, high. Beautiful. We have a very beautiful order block over here. You guys can see that, right? Let me zoom a little bit more further, right? 1 second. Okay, we have a very beautiful order block. You have a very weak to the upside that might have done some, stop hunt. You know what? That must be a very strong supply. Why? Because price has a massive candle afterwards. Well, the next thing you know, price takes you out. It stops everybody out, and you'll be like, maybe we broke all this structure, that structure. Now I'm going for a beautiful buy over here, and the next thing you know, bam, you get smashed through all the way down here. And guess what? All you gotta do is just this. Zoom out a little bit, and that's it. That's your order flow. Again, guys. Now, some of you gonna argue and say, again, this is a liquidity grab. It's beautiful. I respect you all, guys. It's beautiful. Everybody has their own, strategy, way, approach. But me, that I trade supply and demand market structure, that's the most effective way I can identify that in order for me to know how and where I'm entering and what's going on to the left, why this is important for, right? Now, this being said, now they gave you the understanding, example, explanation of why you might be hitting a lot of break-even stop losses, because every time that you're taking a trade based on supply and demand or structure, always ask yourself, what's going on to the left? What am I missing? What is the higher time frame telling me? What is the order flow telling me? You guys getting what I'm saying? Okay, now, I hope this is clear for you. If not, guys, just leave a comment section below. I wish I could interact and have a chat with you. This is something that actually I'm working towards now. Definitely, I'm going to make a, as I said before, Telegram group or maybe a Discord group where we can all chat each other, interact with each other, support each other, right? Now, what I'm going to be doing next is I'm going to be giving you tips and tricks on how you can take the best advantage for you to understand, okay, what do I do it? Because obviously, so far, I gave you some examples, right? And I explained it to you that, oh, this is what happens and this is the reason why majority of the time you take the stop loss or break even. But is it always the case? No, absolutely not. Because if we go back over here, right, there might be some, okay, let's go back literally here, the continuation of this. There might be cases where this structure holds and you could make money with it, right? It's not that it's wrong, but knowing what's going on, it's definitely going to help you. So for example, look at this. This is the first one I can see on my eyes, right? Go high, we go low, we go high, we go low, we go high, we go low. You see, in this case, this one over here would have been a very, very beautiful trade. You see? So now you might be saying, okay, hold on. You just told us to not take any trade on this zone because, we broke the structure. We're not going to have a retracement towards the upside. How come now you're saying this is a beautiful trade, right? I know. That's the first question I will be asking to somebody if I see them telling me this. However, what you have to understand, guys, and this is something that I used to miss so much when someone explained to me, is that everything that you're learning on trading, everything you're trying to understand on trading is all based on one single factor, which is the edge, right? Or you can call it statistics, probability, whatever you call it. That's what is this about, right? Now, however, there are certain edges, certain, condition criteria that sometimes are higher than the others. So in this case, for example, taking a trade from here, right? I'm not saying, guys, it's wrong. All I'm saying to you is that there is a massive, massive difference for you to take a trade from this supply over here, right? Compare it to this supply. The edge, and that's where I'm going now, which is this one, the edge, the statistic, the probability for you to have a trade that plays out from this supply is definitely extremely higher than this supply over here. Why? Because by the time the price breaks the order flow and it retraces, right, it might have taken out already all these liquidities. Now I'm saying liquidities, it can be even structure, whatever, name it. You see all these liquidities are taken out. Now what? That this is extreme supply of the order flow, right? So if you see any break happening afterward, the likelihood of this playing out extremely higher compared to the one over here. But that doesn't mean that you cannot trade this one. But how do you trade it? And that's why I'm going to give you some tips and tricks. So if you are in this order flow from this high to this low, right, you could potentially leave a pending order over here. Safe, not safe, but high probability. However, when you are in these scenarios, right, you cannot leave a pending order. It's not safe. Okay, so what do? You wait for further confirmation in smaller time frame. So in this case, for example, let's go in and let's see. I'm not sure how low a time frame I can get into it, but hopefully, yeah, okay. I just came all the way to 5 minutes. Like, look at this. Like, literally, okay, what is going on? Knowing the fact that this high is extremely risky because this high need to be taken out just because the high degree of order flow has to be respected. So we know what? The high degree of order flow has been broken, right? So we expect a retracement. Cool, perfect. So what do we see over here? If now you use the extra confluence, right? Guys, look, you can already see the trade is over here, right? You got a supply, price step to it, start breaking a lot of structure over here, goes down. Will you take that? Well, that's up to you. I would have definitely taken it because I can already see based on the way I trade, there are so many confluences telling me that this is a valid setup. But let's say you don't feel comfortable because you don't see any clear break of structure. Well, the next thing you know, you just wait. There we go. Okay, beautiful, beautiful trade over here. And you guys following what I'm saying? Okay, 1 second. Let me put the entry over here, right? And voila, there you go. That's definitely the entry. So you got this high. There you go. 4.5 piece stop loss. Beautiful target. All the way down there, that's already a 1 to 9, 1 to 8, 1 to whatever you want to call it. Okay, so that's one important tips that I wanted to give it to you that you can take away, backtest that, see how it goes, see how you can implement on that. Like for example, in this one, right? The same thing. You guys remember this yellow box, right? We say that this stopped you out and you shouldn't have left a pending order. Check this out. What do you know? You know that price gets to the supply, you wait for lower time frame confirmation. So we are in 5 minutes. What can you see? Nothing. Price comes here. High, low, high, low, high, low, nothing. Boom, it breaks to the upside. Breaks to the downside. Yeah, you can take that. This is a retracement. But then as soon as you see this, now this is invalid. What do? You wait now for price to get on a higher level, which is definitely on the high level of supply, which is over here, right? And then next thing you know, bam, bada, bam. Look at this. Price comes here, equal highs, gets taken out from this massive wick over here. Break of structure to the downside. Very huge wick over here. So there's not much you can do about it. You wait for further confirmation, high, low, high, low, high, low, boom, break of structure. Here we go. Guys, you see, I know it sounds very simple when I show it to you, and it is because I tried my best to, show you the most simplest way possible. However, I can tell you guys that if you don't practice, you don't backtest, as I always say, you're going to have a hard time to grasp everything I'm sharing with you. And again, look at this, another beautiful, beautiful trade with a potential for a beautiful low to the downside for a nice 1 to 10, 12, whatever you want to call it. Okay, so these are the things that are very, very important, and these are the things that you should be always keeping an eye on, because otherwise you're going to have a very hard time. Also, another important takeaway I can give it to you, and that goes back not on the entry model, but it goes more around, let's say, risk management side. So now going back to all this drawing that we made, I'm sorry for the cows over here, but I promise I'm going to clear everything very soon. So now coming back over here, right, and seeing all these other things. For example, let's say that you were in this high that made this low, right? So we saw before that actually price, what did he do? He took everybody out over here, right? So let me remove these drawings so we can have a clear vision over here. So now let's say that you wait for a smaller time frame supply over here, right? So you can already see that there is a shift of momentum on this zone over here. So you could potentially take the trade. In this case, one thing that I can suggest you to do, especially when you are in a danger zones like this, right? As soon as you see price going towards the direction, so in this case, it's like 1 to 4, 1 to 5, whatever it is. So let's say, 1 to 4, you can start taking some partial out because you know that this is anyway a very important supply zone. It can give a reaction that can take you out, okay? So the two ways you can do for you to take the advantage of these zones, if you want to trade them, right, is pretty much one, using the right understanding of time frame. So using the smaller time frame, the way you should be using that, right? And the second one is basically taking some partial as soon as you see some reaction going away from there. In both cases, you will be extremely, extremely safe. And I'm not saying you're not going to hit a stop loss. Of course you will. However, you will be safe, right? And then you can trade this better with more confidence. Because trust me, the amount of stop I've taken because I never understood this, it just destroyed me. Because I was every time like, oh, this is the high. This is the low. I'm taking the trade. Yeah, bam. I got taken out. And then, oh, we got to break a structure. And then boom, I got taken out again. I'm like, what in the hell? What is going on? Why this is happening to me every single time? Right? So that's very, very important. So guys, as I always say, do not underestimate the time frame. Do not underestimate the order flow. And I'm going to give you another huge video right now, because if you understand further how the time frame works, which is something that I'm literally explaining on this video over here, so make sure that you watch that. Yes, the next video about the powerful of blending all the time frame together. Trust me, you can take your trading to a whole new level. This being said, I'll see you to the next one.